fix the mic. Give me a second. Okay, we're good. What's going on, investors? Dusty here from Investments, and today we're gonna look at some stocks. We're gonna look at some cryptos. We're gonna look at all the charts for all these and look into the down day and see what really has become of this, and see if this downturn kind of knocks some of our trades out, or if we're still looking okay, and just try to reassess the landscape of what this is meaning for all these charts, right? Is this gonna ruin all of them, or are we gonna continue on, and do they look okay? And just kind of assess them from there. If this is your first time here, this is my trading journal, and also one of the tools in my toolbox to achieve my goal of financial independence. And the real reason I'm trying to do that is to buy back my time, to get away from obviously selling my time. And reason I am using this as one of my tools is because I've had success in the past with trading and spotting stocks at the lows. Not so much selling at the highs, but hey, at least you spot the lows and grow your paper value. So yeah, that's what we're doing here, and happy to have you along if you are tuning in. And one of the things I always say on every stream is, if you have stocks that you are interested in, you would like me to look at, or anything that you want to put on my horizon, let me know, because otherwise you get the same laser focus on the same stocks and cryptos that you already know. So it's very, very difficult to broaden that horizon without someone pointing it out to you sometimes. So please feel free to let me know, either in the live chat or the regular chat when this video goes live. We'd be happy to look at any of them. So you're noticing right off the bat, without even opening any of these charts, you got negative, a lot of red on the day. And I think that happened within the past couple hours, to be honest. Bitcoin kind of took a nosedive and dragged the rest of the market with it. If you were watching yesterday, we were talking about, like, hey, a nice 5% day on Bitcoin would lead to like maybe low double digits on some of these altcoins, or like a 10% move-ish. We wanted it to be a positive move, but you take what you can get, I guess. To be honest, not too happy about that, but some of these look okay still. I'm hoping, at least. ICX, thing I like about that is you are again in December off of a critical. Dude, I can't have you squeaking that pig right now, bro. You got my dog a pig toy and he loves squeaking it at the worst times. You got this reversal at a critical level, right? So your reversal in December, at the end of December, happened. You got a nice double bottom here at this important level where you are almost at the all-time lows. The all-time low happened in January of 2000, and you were talking about 10 cents ish, give or take, and this one you're talking about 14. And apparently we got ads on here. Okay. One of the things I did like about this one is that your low here compared to your low here, your second one is higher, which means you're cascading, you're building, you're stair-stepping up, which is always a very good sign, and something you want to see happen as you continue onward, right? So that's a very good sign for the macro structure. The microstructure is looking decent as well. Your first ticket after this reversal was to cross this important red line I have marked here, where this was your support back in January of 2019. Again, you had multiple touches here, and what we like to do is we like to identify important lines on the horizontal, right? So if you look left into the past, what levels were important, right? What levels did you have a little bit of playing around? What levels did you have some price action before it went straight up, right? because when you look something right here, we have straight up, straight down, there's not much of a floor. So you like to see support floors built in, tested, retested, just to show the significance of it. So we were saying that 22, this red line here, 17 cents, just about 18, was an important line. And back in mid-January, you broke above there. And one of the things you really like to see is when it breaks above there, if it pulls back to retest that line. It is a fantastic sign, and especially if it continues on higher. It shows that is being respected as the new support, right? So it's like, imagine you're going up the stairs, and oh, I'm on floor number 2. And you just want to test that floor, right? And see if it's sturdy enough. And this is what it's basically doing. It's testing floor number 2 to see if there's enough stability to hold its weight. And they're definitely showing that it is. Another sign we like to see is we like to see it break above the 200-day moving average. And that would be this blue line on this chart. And you can see it broke above here a couple times, but really in the most recent time frame has broken above there on February 15th, and since then it has remained above there. You again might have had a retest here, which is a great sign. You'd like to see it retest it on the way up. And even this recent drawdown, you're looking at 10% down, but you're still above the 200-day moving average. You would like to have your candle close. Let's switch to a better time frame for this. I'm just going to mark a couple important lines. This one's probably the most important right here. The secondary one. So what I'm looking for on this is I'm looking for where I think the floor should be. So you had this price action in this range here where you tested it as support before breaking above there, where you tested it on a back test you tested it this first time as resistance. So you got to that floor and you said, oh, I can't get up here yet, it was blocked off, so you fell back down, and then you got above it and now you're testing it as support. You would like to see this maintain as support and continue on higher. So ICX doesn't look like it fell too hard yet. 10%. I mean, it's not nice to see, but these are already from the low. Oops. I'll use this tool even though it's not what I wanted. It's 63% off the low. So from here to here is already a 63% gain where we're at. So when you're talking about a 10% drawdown, that's pretty acceptable compared to 63% to the upside. And let's see what a fib looks like, just out of curiosity. Already almost to the 382. Let me zoom in on this, get a little closer. Yeah, and draw my lines a little better. So yeah, you really want to see that orange line, 22.5-ish cents hold. That's your ideal situation here. Okay, let's blow through some of these other ones. I don't want to sit here too long tonight because it's no fun looking at the downtrend, right? You always want to see the nice price action. And to be honest, these charts have just been rolling over for a little bit, and I think there's a lot to do with liquidity is not entering the market as anticipated. And I think a large percentage of that has to do with higher interest rates making other avenues of investment appealing. And I'm planning on making a video about this, but things such as like your old 90s investment strategies are starting to be relevant again, where high interest rates are making things like bonds and like high interest savings accounts and even CDs, plausible investment strategies, as opposed to very risky stocks or cryptos, right? So it's like, if you are sitting on a lot of money, why wouldn't you take the more secure approach and get your percent gain that's a stable gain that is not as risky as putting it into something like a stock or a crypto. I think it's just going to suck liquidity out of the market, and you're not going to see as drastic swings potentially, but that's just my opinion. I'll make a video about that, talking about it later. T-Fuel, let's see what we're looking at. You're still, like, if this were to pivot here, it would not be a bad sign, right? You're still making higher lows, so that would be a fantastic sign. You're still above the blue 200-day moving average. You're still on pace for everything that you want to see. Let's go to the daily here and see what it looks like. I would say your important level to hold, you don't want to make a lower low than this, so you want to at least hold above 4.9 cents. So let's call it 5 to make it easy, round number. But I'm correlating that number with this low and this high here back in November 26. You also had multiple touches along this time frame, not too much when you look left, but that's where this red line came into action, where you were seeing this price action, and then you saw at 3 cents it pivoted. It turned around with high volume coming to the upside. One of the things we were seeing with this is our fib drawn. We did a fib retrace from the high to the low, and we were saying you could potentially see a 382, a 50%, or a 618, which are just massive percent gains. So the fact that this one's pulling back means it might be a lower risk entry. And if we zoom back into this, let's go to far. I mean, realistically, if we are getting down to the 200-day moving average, or this orange line, whichever comes first, or we start to show that we're reversing and stacking higher, it might be a very good entry, even lower risk entry on this stock here. I'm sorry, crypto. T-Fuel is a crypto. Theta, we had a parallel channel drawn on this. It is not turning out. We are broken down below there, so we're gonna delete that, and we're gonna make let's go to our higher time frame, see if we could see a new floor. So again, these aren't looking too terrible, considering, like, from the low to the high. Well, let's get the right tool here. From the low to the high, you're talking about 80%. So the fact that it's down 10%, not too crazy, right? You can deal with that. You still above the 200-day, that's good. I think your critical line, you want to stay above this low at $1, but you definitely want to stay above this line at 97 cents, because you've had it tested as resistance here, you've had it tested as support here, you've had it tested as support there, resistance back in December of 2020. So that is an important line at 96 cents. Definitely don't want to see it drop below that, and I think we are on pace to see this just, you know, continue on. Your RSI on a lot of these is resetting. So your spring basically is coiling and coiling and coiling. So these downtrends, or these little, you know, downward flushes where the price just kind of tanks 10% in one day, are sometimes really good for the overall structure. Like, you can't continue straight up, because you need a little bit of price action in there to show that, hey, there is floors being put in here. It's like if you were to build the Eiffel Tower just a straight bar, you wouldn't have any support. So you have to add a nice base in to keep building it higher and higher, and you're actually getting that. And when you get these down flushes, you reset this RSI, and to see it pulling back to already 43 is a very good sign, because you could potentially see it coiled like a spring, you know, where it just keeps compressing and compressing and can explode again to the upside. All right, I didn't do Bitcoin yet. Let's take a look at it. We had a nice parallel channel here that did not hold any sort of weight. Now we are looking at, you know, just trying to identify if we can see anything. I would say this is our new trend line. Okay, here's the line in the sand you want to see held. So you can see, I'll break this down for you in a second. Let me just get it lined up good, and then I'll zoom in onto the 8 hour so I can show you nice and easily. This orange line here that we have at 21,370, give or take. You can see when we had that pump in January this year, it was respecting that level as resistance and it wasn't able to really break above there. Then you had that nice pop up above there, and then you had another back test of it. So like popped up above there, came back to retest it to see if that was supporting it, and it was. So that would be your line in the sand where you want to see it stay above there, and that is just on the near term. Realistically, you're not in trouble even if you pull back more. The 200-day moving average is way down here. You'd like to stay above that. That's at 1990 today. And then I would say your major support we were thinking was, yeah, it's lining up pretty well with your 200-day moving average, 1964. 19,640. One of the things we did like to highlight in this is this formation here, and we wanted to look left because in 2017 you had this massive run up where it peaked out at 20,000, and you had this long drawdown for like a year, right? And everyone thought like, oh, okay, so it keeps respecting this level at 5,900 as a floor, right? Like you can see there's a touch here, touch here, touch here, touch here at that price level, and everyone's expecting that to maintain as the floor, but then you had like a nice capitulation wave down before the reversal. I think this formation compared to this formation is very similar, and it's nice to look at things that you think are similar, especially when you had this all-time high with a nice drawdown for about a year, and then you have a similar formation forming up. One of the things I didn't mention about this is this little doohickey right here, right? So let's measure this up. I'm gonna delete some of these just to clean up the chart. But if you look at the low of the capitulation, this ultimate like downtrend here, you have 3,000. This pullback got to 3,800, and this high is at 13,000. So like you went from 3,000 to 13,000 and then had a massive downtrend back to 3,000 before pulling up higher. I think that something like that is very possible to happen, and when you get this kind of nice price action, sometimes you need these resets. So you can see when you had this downtrend, look what it did to your RSI. It just absolutely coiled the spring so that you could continue on higher. So do I think this is the formation that's playing out now? I think it's too early for that. I think right now you're seeing something like one of these downtrends, right? Let's do a little measurement here. Let's do the high to the low here. 34%. I don't even think we're close to that yet. No, we're at 11% from the high to the low. To the next line, you're looking at 14. To the 200-day moving average, you're looking at 21%. I don't think we're going to see something like that. I think it's going to respect this line at 21,370. I think we will respect this and continue on at least building a formation on here. That is my opinion on this, and I think we are not in trouble. Like I know it looks brutal to see all this red appearing, but when you think about it in retrospect, it's not too bad. When you go up 80% on some of these, a little 10% pullback is not bad. So this is up 60% from the low. 10% pullback on the day, 20% pullback total is not bad at all. So that's kind of all. I'll do a couple more cryptos. I did not like XLM recently. Chart looks like it's double topping, went off the low. So I'm thinking maybe you're going to start seeing some of these lower prices retested. Your next line of resistance would be at 6. Let's make that pretty. 7 cents. So if you do break this line at 8 cents, you're going down to 7 cents, and I don't see it. I mean, you could stop there, but if you do fall below that, your next line, looking for a point where you have a resistance and a support. I guess 5.5 cents. It's just not looking real great for XLM compared to like some of the other ones. 0x still looks okay. Like you got this nice supply line here where you're respecting it right off this breakout of this wedge. I think this one looks decent continuing onward. You're still above the 200-day average on that one as well. Shiba looks like it's kind of breaking down, not looking great on this. You have a nice rollover, which is never what you want to see. One of the things I did not like about this one to begin with is all these massive spikes. They all have major wicks at the top, which means like when it raises up in price, there's a lot of selling action that happens. So it's like, imagine like someone is just sitting there waiting to see the price go up so they can just dump their bag onto people. That's not something you like to see. So that's one of the things that is a negative to me on this one. I would say if you're playing it, your line to respect is 1085. And the reason I'm saying that is because you had a touch here as support, touches as resistance, touches as resistance, touches as support. And just looking left, you had multiple touches on here. When you look back into the 2021, you don't really have much of anything, but that's because it was pretty much straight up and down to begin with, so you're not going to see much of anything. Any other cryptos that I should look at? Do I have anything in the chat? No. I will. Let me do a message here. That way, as people pop in, hopefully they'll leave me some recommendations to take a look at or requests. I'm going to look at 1 or 2 more cryptos before I switch to some of these stocks I wanted to see. There was one we were looking at yesterday. Oh yeah, Litecoin. We did not like, okay. Litecoin, we liked the overall structure of it. We liked that this lows, these like massive lows across the time just keep cascading higher and higher, right? Like it makes the very macro structure look good, kind of like ICX, but even on a bigger scale. But we were saying that this is an important level at 93. You really need to respect this because that is where you just had so many touches, and if you're going to break above there, you need to respect it as your level to stay above. You are still above your 200-day moving average, but you had a massive pullback, and that does not bode well, because you got so much like straight up and down. There's not really a lot of formation in here. It makes it very difficult to mark anything for your price levels to me. I mean, you definitely want to see it stay above, where you got your candle close on the daily, 80. Definitely want to stay above 80. Yeah, I guess that's the line here. You got a couple touches along the time frames, but nothing like that 93 level. Like, that is a very important level to stay above. And to be honest, like 105 is also an important level here. So 93 to 105 is like your range of like, hey, this is like the important range to play in. When you play in here, make sure you get out of it, because you don't want to be stuck in here, because sometimes you'll roll over and fall back down, which is what you've just seen. Your RSI is almost really reset. You're down to 40 on this guy. Spring is coiling, so that's a nice situation. Low, higher, low, and nothing there. Yeah, not looking great. But I do like the macro structure. So I think in the short term, you might get a pullback. You might see something like that $80 level. But I think this is going to be a big player in the next run. So whatever that run looks like, if it's just a short-term run, if it's actually like a run to like the all-time highs, Bitcoin will dictate that. I think the macro environment will dictate that it will not be running to all-time highs, but something like this could potentially, even in an environment like that. So even if Bitcoin doesn't push to 60K, I think Litecoin has the potential to make runs to all-time highs, which would put you 300 to 400. It's just this overall structure that screams to me like, hey, this is continuously building up higher and higher and higher. I just really like to see it, and I think this is going to be one to watch. And it's always been like a main player. It kind of got forgotten about, you know, like Ethereum and Bitcoin are always the main ones, but Litecoin was always a main player as well. It just kind of, oops, never got the credit it deserved, I guess. Ethereum, we were drawing as this nice parallel channel, and to be honest, it's still within that channel, so it's not looking too bad for Ethereum. You still potentially could see a little bit more downside and be okay. You're still above the 200-day moving average. I'd say this is still valid. You're still potentially making higher lows, which is good. And your line to respect that is at 1405 to be exact, but that correlates to this all-time high with a couple touches here, and here. Maybe a little bit of juice there too. Yeah, so I think you're pretty far removed from that. So yeah, it's a down day, but you're not looking too bad on some of these. Zcash was probably one of the worst looking ones, breaking down pretty drastically. Don't really play this Zcash, but just absolutely looking like shit. You're almost, you might almost fall to these low levels here if you continue onward. And you're talking, your next line is at 33, so from 39 to 33 you could potentially see, from where we're at, another 16% downside. Not a great one, especially when there's ones that look much better. Right, so let's go back to our watch list. Any ones that you want me to take a look at, let me know. Amazon, we were drawing this little squiggles to say like if we saw this would be a great little formation. I'm just gonna get that out of the way so we can see, and we'll leave that on there because if it plays out, that'd be fantastic. No promises on anything like that though. We were seeing it potentially looking like a head and shoulders. Doesn't look too valid, but still marked it on there because when you look at these, you try to look for identifiable patterns, and sometimes you gotta squint to see them, I guess I'll say, and it might not be valid, so you try to draw it and see if it starts to play out, and then you build more and more to your case. Mose is looking fantastic, up 5% for the day, which is, it's a stock, not a crypto, so this is looking fantastic. You can see I got my entry, I think I got it on this breakout actually, so I bought it at like 47, which is really nice. You're looking at let's go to the weekly just so I can see here. You're not at all-time highs. You got a nice formation building up. You had that recent flat bottom where it's broken above your demand line, and now you're just continuing to break out. I really like this play right now, and you just broke above the 200-day moving average at the end of February. Looking really good. Your first line was 55, and that was because you had multiple touches as support, but then it became resistance a couple times. Let's see if we can zoom in. It's not back testing it yet, but would expect to see something like that happen. Wow, I am impressed with that one. T-Mobile is testing the 200-day moving average. I was concerned with this one because it's starting to appear like it might want to be rolling over. You're starting to get negative momentum creeping up. Your RSI is really low, and you're testing that 200-day moving average more and more as you get tighter and tighter. Just I think we're at all-time highs on this one too. Yeah, we are. So just not looking. I mean, I definitely wouldn't take a trade here, is what I will say. This would be like the worst place to take a trade on this one. However, I am already into this position, and I don't think I want to sell at this point. This is more of a fundamental long-term trade to me. XRP is a waste of my time. EOSE has pulled back pretty dramatically from the high to the low, almost 30%, but that was a pretty massive pump where it pumped up almost 80% total. And this is not a crypto, this is a stock. You caught a good swing here, and I know I was spotting this one just due to the insider trading that was going on. There's a lot of insider buying. I'm sorry, not insider trading, insider buying. One is legal, one is not, and that's why I was eyeing it. But then it had that massive pump up, and I was like, okay, well, you don't FOMO into something like this. So you had that pump up, nice drawback down, which, to be honest, that's to be expected. Nothing goes straight up. You're back down to the 618 from that swing low to the swing high, which is a good retest, which means if it is going to continue higher, it has already recoiled that spring enough to where it's got some momentum to continue on to the positive side, right? Testing the 200-day moving average, the blue line there. This might be This might be the juicer. I like it. I'm trying to analyze this right now. This pullback is hitting this 164 level, which seems to have some sort of value back here, but I'm just trying to see if there's a more important one. Yeah, I think 164, 162 is probably where it's at. But if you look left, you don't have anything because you haven't been down this far. And to be honest, if you do break above, if you do break to the upside, your next stop is at 299. After that, you're talking about 485. After that, your only thing you got to $10 is 7, and there's barely a structure there. So I think if this does start to run, you could potentially see a good amount of upside on something like EOSE. Really liking this one for a trade. I need to look at that one tomorrow for sure, when I have my account open and some money in there. Take a look at a couple other ones here before we sign off for the night. Some of these are just falling apart, right? Like, why would you trade something like MXC right now? It's just continuing to show weakness and weakness. You definitely want to see some sort of structure happen, and you're not getting anything right now. Like, you've just made the lowest low since September of 2021. So I mean, there's nothing. It's just some of these are looking like they're holding okay, and some of them are not. And I mean, that's kind of what you want to analyze here today, is like, when you have these down days, what is going to hold the best, right? Like, what is showing that it still has some strength? You're still gonna see downturns, like it's expected, right? But like, what is showing that the formation hasn't completely broken down? Like something like this, where it's just like, oh, it looks like the floor fell out, you know? You want to see something that still holds some strength. PAA was a trade we took, and I'll keep harping on this one. We measured this one a couple ways just to see where our targets would be. The first one we did was the top of this formation to the bottom of this formation. We copied that, pasted it on the breakout, and you're looking at a 48% gain if this carries through. And then we did a Fibonacci from this swing high to this swing low, and with the Fibonacci, you want to see it come to this red line at the 236, right, to show that is a valid Fibonacci. And in fact, you tested it as support one time in September this past year, right? But then we had this nice flat top, a little bit of slope to it, not too crazy, but then we had a breakout. The breakout is where I purchased, and you could potentially see a 382, a 50%, or a 618 on the fib. The 618 being the highest would take you to a 69% gain on this. But the real thing about this is, if you look on the macro scale, if that is to continue, you might get pullbacks, but it looks like that would be the reversal of this, and you could potentially see it continue on higher to retrace some of these higher values, right? Like this is an important one at 24. You got another one at 32-ish. You can see it potentially run to try to see if, hey, can it hit some of these levels again? Plus it's oil, it's a pipeline, so it's one of the things that I think is going to do well in the near term. Nokia was one we were watching. Let me just take a brief look at it. We were looking to see if there was going to be an inverted headed shoulders, which is a common reversal signal, right? Like a reversal formation. You got your shoulder here, head, shoulder, and your neckline. To have a valid inverted head and shoulders, you need to break this neckline. So you need to get up to $6.25, which is pretty close to, oh no, it's not close to double, but it's percentage that I wouldn't be willing to take this trade, is what I'm saying, until you get to that neckline and get a breakout above there. If you do get a breakout, your measured move is from the neckline to the top of the head, which is about a 66% gain, which is just short of where I think your target for the formation of your macro is. Like geez, someone's just flying down the road. Your macro formation on this chart shows that you have a couple of touches as resistance, a couple touches as support, multiple touches as support at this $11.50 range. So I think if you do break that neckline, I think that 66% is a good target. I would sell some of that before that, but then I would really hold on to some till around $11, because I think that's the real target that's showing on the macro. GE is another one that is looking great, and I'm only telling you guys because I'm already in it based on my 401k. I already have overexposure, but this is what that inverted head and shoulders formation is going to look like. I will delete this fib just to show real quick. You have your shoulder, your head, and your other shoulder, and then you have your neckline where your shoulder pulls back and your shoulder pulls back after the head, around the head, right? You are broken above that neckline, and your measured move would be a 57% gain, which would take you to $103. Again, this is the macro level as well. So this one correlates pretty well to important levels in history. Like this one's from 2011. This touch is from 2002. And then you had a couple touches back in 1997. That just sounds weird to say. But yeah, that's the important level. And I think if you break above there, which you already are, you get a little bit of volume coming out of there. I think you wait a couple months and you're gonna get there. It's just the way she goes, bub. And let's see, anything else that I should take a look at? I'm gonna pull up CoinMarketCap and just see which one's going down the most. Filecoin, Zill, these are trash, right? ICP, nah, that one's falling apart. Let's Chainlink 15% down, Mana 15% down, Theta 14% down, but we said that didn't look too bad. Shiba 14. So you got double digits across the board, low double digits. You're talking tens. Doge 10%. Let's see if this continues. Some of these look okay. The ones we looked at, some of them don't. Interesting to see which ones have strength. Internet computer. I don't know. Oh, I'm on the monthly, that's why. It's like, why is there no information? I mean, is that pullback really that bad, right? This is the level you want to retest. You got an important level here where you had your breakout from the low, then you tested this as resistance before breaking out, and then you tested it as support. I would say if $5 is your low, you're building from that. So as long as you don't go lower, I think you're going to continue on. You're still above the 200-day moving average. Yeah, it's not pretty to have that nice drawdown, but it doesn't look too bad. And what, it's 10-12% down? I'd take it. Really nice area for a low risk entry on something like this, to be honest. Your next target, I'd say 950. I'm just basing that off July 2022, June 2022. You had a couple touches there and a couple more back here. Lower risk entry. Yeah, that's kind of all I got for you guys. There was one that Mitch was looking at. What was it? Let's look real quick. Coinbase. Exchanges. Pair SN. It's S something. SNX? No, it had a U in it, I think. I don't see it. Yeah, alright. Well, I'm gonna end it there. Unless you guys have any ones that you want me to take a look at, any charts. Like I said, even though it's a down day, some of these look okay. They don't look like they're falling apart too hard. So as long as we continue, we should be fine. Bitcoin is not looking too drastically terrible, especially if we stop our downtrend here. Like this, if this is going to be a new low, that's fine. We can continue from here, no problem. What I would like to see is I'd like to see 21,370 hold, give or take a little bit. There's just a couple touches here that show that this value is pretty significant. But that's all I have today. Let me just check the comments to make sure no one requested anything. No requests. All right. So till next.